When it comes to money, most people are trapped in a system they don't even understand. I know because for years I was one of them. I thought working hard and saving would be enough. But the truth is, the rules are different than what we were taught. That's why today, I want to share with you the 9 money lessons that changed my life. Lessons I wish someone had handed me a decade ago. These aren't theories. These are the realities of how money, banks, and wealth truly work. And if you stick with me until the end, you'll walk away with a completely different view of money, the kind most people never learn until it's too late. Here's the first wake-up call. The financial system is designed so you don't truly own the things you use every day. You buy a house? In reality, it's the bank's house until you finish paying off decades of mortgage payments. You drive a car? Chances are it's leased or financed, which means you're just renting it with a different label. Even entertainment isn't yours anymore. Remember CDs, DVDs, shelves stacked with music and movies? Today, we subscribe. We pay endlessly for access, but never really own. And money in the bank? Same story. The dollars you think are sitting safely in your account legally belong to the bank. What you actually hold is a claim, a debt the bank owes you. Even with crypto, unless you move it to your own wallet, it's not really yours. Exchanges own it, and they simply promise to give it back. The lesson? Cut out unnecessary middlemen. Move closer to real ownership. Assets in your name, under your control, with no one standing between you and what's yours. Because the less you actually own, the more control the system has over your future. But ownership is just the first illusion. Because even when we think we're keeping money safe in the bank, the truth is that money isn't really there. Let me show you what actually happens when you deposit a single dollar. The second lesson most people never hear: when you deposit $1,000 in the bank, you're not storing money. You're making a loan to them. The bank keeps about 10% of your deposit and then lends out the rest. Your $1,000 instantly becomes $100 they hold and $900 they loan to someone buying a car. That $900 then gets deposited again, multiplied, and the cycle repeats. From your $1,000, the bank creates several $1,000s out of thin air. That's how modern banking works. It's called fractional reserve banking. But here's the catch. If everyone tried to withdraw their money at once, the bank couldn't pay. That's why bank runs happen when confidence disappears. Sure, there are deposit insurance systems that guarantee around $100,000 per account. But if the whole system collapses, those guarantees are backed by the same banks that would already be in crisis. What's the takeaway here? Banks are not vaults. They're businesses. Treat them as useful tools, not safe storage. And once you understand how banks multiply money out of thin air, it's easy to see why wealth rarely lasts. Because even if you manage to build it, the system is designed to chip away at it generation after generation. There's an old saying, shirt sleeves to shirt sleeves in 3 generations. And sadly, it's true. The first generation builds wealth, often through hard work or business. The second enjoys it. The third usually loses it. Why? Taxes, inflation, and poor financial education. We pay taxes when we earn, when we spend, when we invest, and even when we try to pass wealth to our children. Add inflation, the silent tax that erodes buying power, and the odds of keeping wealth shrink dramatically. But there is a solution: structure. Instead of holding everything in your personal name, build entities that protect and pass on assets. Even something as simple as holding investments inside a company instead of personally can preserve wealth across generations. More advanced families use trusts to control assets long after they're gone. The lesson here? Don't just build wealth, protect it with structure or it disappears. So why is it so hard to hold on to money? Because the money itself isn't real anymore. It's not gold, it's not silver, it's just numbers on a screen. And that changes everything. This lesson changes everything. The dollars in your pocket aren't backed by gold, silver, or anything tangible. Since 1971, when the U.S. left the gold standard, money became nothing more than government-issued debt. Every dollar is a liability of the central bank. Every bank deposit is a liability of your bank. Even your credit card balance is just another layer of debt. That's why digital dollars far exceed physical ones. Money today is mostly numbers on a screen. Here's the danger. If money is only debt, governments can print it endlessly. That means your savings lose value over time through inflation. That's why $1,000 in the 1990s could buy far more than $1,000 today. The dollar isn't a store of value anymore. It's a moving target. The lesson? Money itself is unstable. Real wealth comes from owning assets that stand outside this cycle. Real estate, equities, commodities, businesses, those are stores of value. Money isn't wealth, it's just a tool. Now, if money is just debt, the real game isn't about saving cash, it's about owning assets. And the wealthy know a trick most people miss. They don't sell their assets when they need money. They borrow against them. Here's a secret the wealthy use every day. They rarely sell their best investments. Instead, they borrow against them. Let's say you invested $100,000 in stocks that grew to $300,000. If you sell, you owe taxes on $200,000 of gains. But if you pledge the $300,000 as collateral and borrow $150,000, you get cash in hand, tax-free. Yes, you pay interest. But if that interest is 3% and you reinvest into something earning 7%, you pocket the spread. Meanwhile, your original investment keeps compounding. This is why billionaires live off loans. They get liquidity without triggering taxes, keeping their assets working for them. For everyday investors, the scale is smaller, but the principle holds. Don't kill the golden goose. The takeaway? Wealth grows fastest when you let assets ride. Don't sell, borrow smartly, and let compounding keep doing the heavy lifting. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" down below. It helps me know what kind of videos to make for you. Moving forward, even if you own assets, if they're all tied to one country, one government, one system, you're exposed. That's why the wealthy spread their lives across borders, a strategy known as planting flags. Most people keep everything, job, business, savings, investments, inside their home country. That's riskier than it looks. If your country faces crisis, inflation, or new laws, everything you own is exposed. The wealthy use the flag theory instead, diversifying across borders. Live in one country, incorporate in another, bank in a third, and invest in a fourth. That way, no single government controls your entire life. You gain flexibility, safety, and sometimes better tax treatment. Think about it. If your home country suffers a banking crisis, your money abroad is untouched. If taxes rise locally, your business abroad still operates. That's freedom. The lesson here? The world is your chessboard. Plant your flags in the best places and no single country can ever trap your wealth. And while diversifying across borders can protect your money, there's something money can't protect you from: people. Because wealth doesn't change who people are. It simply reveals it. They say money changes people. The truth? It doesn't. It just amplifies who they already were. A generous person with wealth usually becomes more generous. A selfish friend who never paid you back $20. With millions, they'll still find a way to avoid responsibility. This is why wealth can strain relationships, not because money corrupts, but because it exposes. Friends, family, even business partners reveal their true nature when money is involved. Some rise with integrity, others crumble. And here's the hard part. You don't control how others behave with money, but you do control who you keep around you. What's the lesson here? Surround yourself with people of integrity before wealth arrives. Money doesn't create character, it magnifies it. choose carefully. And once you see how money exposes character, the next lesson is about how money exposes you. What you choose to buy, assets or liabilities, decides whether your future grows or collapses. Two people can earn the same income and live completely different futures. One spends on cars, clothes, and vacations, looking rich but one step away from collapse if the income stops. The other funnels cash into assets, stocks, real estate, businesses. At first, their lifestyle looks modest. But over time, those assets generate income that pays for cars, clothes, vacations, all without depending on a job. The difference is subtle but life-changing. One is consuming, the other is building. Assets feed you for life. Liabilities feed your ego today but starve your tomorrow. The takeaway? Wealth isn't built by looking rich. It's built by owning assets that eventually buy your freedom and the lifestyle you want. But even if you make all the right choices, there's one last truth. The game itself is not fair. Yet the only way to win is to play by the rules that already exist. So now you've seen it. 9 lessons the system never teaches, but that can completely change your financial future. And the biggest question left is simple. Which lesson will you act on first? Here's the final truth. The money game is not fair. Some are born with advantages, others without. The rules favor those who already have capital. But ignoring the game doesn't free you from it. If you don't play, you're stuck trading time for survival forever. So the only way forward is to learn the rules. How to earn, how to invest, how to protect wealth, how to structure it. Study how the wealthy play. Apply the same strategies at your level. It may not feel fair, but here's the flip side. Once you understand the rules, you stop playing blind. You play with intention. And over time, that's how ordinary people build extraordinary outcomes. Here's the takeaway. You can't escape the game, but if you learn the rules, you can finally win it. So now you've seen it. 9 lessons the system never teaches, but that can completely change your financial future. And the biggest question left is simple. Which lesson will you act on first? These 9 lessons changed the way I see money forever. They showed me that wealth isn't about working harder. It's about playing smarter, seeing through illusions, and structuring your life so you control your money, not the other way around. If this video gave you value, don't just let it end here. Take one lesson, just one, and apply it this week. Maybe it's moving money into assets. Maybe it's setting up a structure. Maybe it's simply changing how you think about debt. That's how real change starts. And if you're ready to go deeper, watch my next video right here. It connects directly with what we covered today and will open your eyes to strategies the wealthy don't talk about publicly. Because remember, most people never learn these lessons until it's too late. You still have time. Until next time, stay consistent, stay patient, and stay winning. See you in the next one, Money Magician.